Good afternoon, everyone, and welcome to Muck on the Markets. As you quite well know, we haven't been doing this very regularly of late. There's multiple reasons for that, but one being primarily that the market just has not been moving much, and I think Muck and I talked about that our last time on the show. Plus, I had some personal issues with my son I had to deal with. Anyway, we're here this afternoon. With a little bit of movement this week, Muck. What are your thoughts?
Oh yeah, and the World Cup kind of also interfered with our daily show. I know me and you are both avid viewers of the football, or as Americans call it, the soccer. But I kind of want to use this time. It doesn't happen often. It doesn't happen often, but when it happens, I think, when BTFT gets something right, and we got something right that we were talking about for like the last 6 months. I think it's amazing, and I think we deserve a victory lap. I've been telling people, you've been telling people, the only kind of yield that I want to buy is American equity yield. I think it's the only yield worth a damn. And what happened? What happened? Oh my God, Portugal has troubles. Oh my God. Just like what we told everybody would happen. We said don't chase the international yield. It's not there. It's a myth. These countries aren't stable, and bam! Oh my God, the countries aren't stable anymore. Oh, what do you know?
Europe is still a hot mess. I mean, it's far and away best economy. Germany actually exports shrank last print. They're in very dangerous waters, I think.
Yeah, I gave a 4-hour presentation yesterday to some investors of mine on how in the 90s European debt was a good play for interest rate, but Latin America and third world debt, the interest rates were high, which made it worth investing in. All they've ever done is come down. '08 gave you some good opportunities to invest in high yield Latin American, emerging market bonds for just a yield. Now you're looking at India debt at 7.5, Brazil debt almost at 5%. You're still looking at Greek, Italian, Spanish yield. We're talking about the Spanish yield needs to hold 4% on a 10-year. Has anybody looked at the U.S. 10-year? The U.S. 10-year is hovering between 2.25, and 2.5. And so you're saying that the Spaniards, who have something like a ridiculous unemployment rate in over 20%,
over 25%,
over 25% unemployed. And at the worst point was what, like 60% unemployment over there?
It's a train wreck.
You're telling me that they only deserve to be 2 points higher on yield than the United States of America, 3 points higher on yield than Germany, which is now the gold standard of everybody, 3 points higher than Germany? I say you're effing mad, and that those numbers don't make sense. They should at least be mid-teens, maybe 10%. And I feel for the people who chase the yield and who put their money in these countries that aren't perfectly stabilized, and now are going to have to pay the price for it, because you're going to see bond yields in Europe go up again. I think we're going to have this summer of, will they, are they approaching default? What's going on? Can they get their debt issues right? All like we did 2 summers ago with the Greek and the Italians, I think it's going to happen again. Bond yields are going to skyrocket on those kind of debt. But the funny thing was, if you ever looked at U.S. junk bonds, right? I mean, even in the junk bond industry in the 2000s, we can go back to the early 80s where junk bonds were selling at, over 10%, right? Because you're writing junk. Now junk's at 7.5%. It's
unbelievable.
It's funny. And one of the main points I made was I would rather put my money in GE's dividend yield, because I think GE as a country, not as a if GE was a country, I think it would be way more stronger in a position than any of these other countries that I would want to chase the yield in. So if I can get a 3% yield in GE, why wouldn't I just take that instead of going for a 4% yield in a country that I don't think can hold that 4% level?
Well, I mean, let me offer a couple thoughts and a couple counters to what you're saying. I think that this general push down in debt costs across the spectrum is one thing, and I 100% agree with you. I think it's a little different when you just limit it to European countries. It's obvious that people believe that Draghi has the firepower to, blow out situations or to keep the fires under control. And I think that's what's keeping them down. That's the only thing. That's my only theory.
Yeah, I mean, the problem is that even if Draghi has unlimited firepower, right? What does that do? You're creating a demand on a market that can't hold that demand anyways. It's all fake. What people aren't seeing is this is all fake demand. The U.S. market it's fake demand. It's because the government's coming in and using money. People have too much money. Hedge funds are borrowing money and they don't have to really pay it back because it's so low. It's
Right.
all fake demand. And the problem is that some of these bond funds and stuff like that have gotten so much money in them that they have to chase yield. And what happens when you chase yield? You drive yield down.
Absolutely.
So that's why I thought it was funny when India put out that bond yield and everybody was like, "Oh my God, this is the greatest thing ever." It's at 7.5%. Really? Because I guarantee 5 to 10 years ago that would have been at 30%. And now you're happy for 7.5. That doesn't make sense to me. Like things haven't changed that much. Yes, I get the market's rallied, but have situations in India severely changed that much to go from a above 10% yield, above 20% yield to now a 7.5 yield? No, I don't think they have.
Now,
That's just
I think what you clearly have going on out there, and so many people have talked about it, and it's kind of been the cause celeb now for at least the last 2 years, has been this chase for yield. And, you have portfolio managers that need to generate yield to get paid,
yeah.
and so they're all chasing this yield, and that's what leads to equity prices continuing to just slowly now grind up, and bond rates to be so low.
Yeah. I mean,
I'm sorry.
yeah, I know. I mean, I agree. It's just it's such a funny. It's so funny. I don't. I mean, it's nice to be proven right, but it's one of those things where it was so obvious that if you just look at the trend is that they've come down and unrealistic. The depreciation in these yield rates is insane. It's almost like a new car.
Yeah, right.
It's been so funny to me, and I took a lot of flack for saying I'm hunting yield, but I'm only hunting yield in equity. And people are like, well, why are you missing out on this? I'm like, I don't feel like I'm missing out on anything. I feel like you're getting in, but you're buying a bond at a higher price, and I feel like that's going to get cut in half. I mean, it's almost comical to me now that on Wednesday CNBC did like a 4-hour thing on like, are these bond yields too unrealistic? It's like, yeah, obviously. If you watch BTFD for the last 8 months, we've been telling you that things are unrealistic.
Well, I don't really want to say too much bad about CNBC, but I will say this much: it's been over 2 years since I've watched the channel. So if that doesn't say enough, and I used to just absolutely have it on the entire time I was trading.
Yeah. I just don't think I think the market does rally higher here. I think we keep going. I just don't know if that. I mean, eventually the money's going to have to come out of fixed income and go into this market because I think the yields are going to get driven down so much. And what's the point? What's the point to have? I mean, a one, to get negative yield rate on a bond when you can possibly get appreciation in an equity market.
Yeah, I mean, I just think my only comment about and I don't disagree with you. I think when you compare your alternatives, because like I say right now, in my trading account, I am 98% cash. And I've made a couple of day plays. Everyone a loser this week, by the way. 4 plays, 4 losers. I should have just sat on my hands and read my book. But I think it's a very difficult market out there. And, I mean, I think already income streams, with the exception of Alcoa, who actually beat on both the top and the bottom line in their initial statement. We're just starting earnings season now. A number of the early reports have already cautioned. It's not weather in the second quarter. I don't know what they're saying it is, but they have some other excuse. And a person who I know well commented on it, saying something to the effect of, well, this is this quarter's excuse. It's a mess.
Yeah.
It's very difficult for investors, as much as this market has run up, for me to blindly put my money in the market. Now, I will say that I have a separate account that I manage. From this is all my own money. That I consider longer-term investments, and on some of the downturns this week, I picked up little pieces and stuff. There's certain things I want to add to, and I'm willing to ride them out. But I'll tell you what, it's a little frightening out there as far as I'm concerned.
Yeah, I think it's funny. I mean, I think that the thing that really gets me is the if you look at the real interest rates on some of these bonds, like not just what the yield is or the yield to date, I think if you look at the real interest rates, you're like, man, these are negative real interest rates. That's hilarious, and people are clamoring for them.
You may as well just make a 0.5% a year in having it in cash.
Yeah.
No risk there.
Yeah, definitely not. I think I've been hearing a lot of chatter that some friends of mine want to go long gold, short U.S. dollar, and short the U.S. markets. I think that could be a killer. I don't think the problem is going long gold. I think going long gold right now might be a good play. KRS Capital, if anybody wants to talk to him, he'd probably know more about gold. I think going short the dollar and trying to go short U.S. equities right now could be a killer, especially if the situations in the EU worsen, are a little bit worse than we think. I don't see the Latin American countries, especially Brazil. I think Brazil could be really hurt, especially if they do have this giant turnover in their government like everyone's expecting because they're out. I don't know. I mean, unless you're going to play the Swiss franc or something like that, but I don't know why you wouldn't back King Dollar right now.
Yeah, I mean, you raise an interesting point. I mean, I will note that Pipsar, who has a daily webinar, which I am a loyal listener to, that if you follow him on Twitter at pipsar.com, he's offered to come on this show many times, or on this network many times. I don't want to put him out until we're kind of fully up to speed, but he thinks he is of the definite belief that a lot of traders, the new traders, that is, who've come in the last 5-6 years, have blown up. Now, I don't know if that's true. I mean, I've told you that I moved to cash, some time ago. Although I've been cautious since basically November, but I was still pretty much fully invested. But he thinks people are blowing out already, and these are people that play margin. I mean, I don't really play with margin. I mean, I may do an intraday trade where I have divine stops and that I'm going to hit and just take no matter what. I'm not going to outthink myself or any way around it. But it's still difficult out there, Muck, I think.
Yeah, I think it's I think it's difficult for a lot of people. I can see a lot of people blowing up. I've heard rumblings of people blowing up. People who used to post their trades and and stuff like that who have been cut off by partners and stuff like that. I think it's a tough market. It's a tough market because things have gotten better, and like computers have gotten better. I think everything's gotten better, and I also think people are more aware of patterns of traders who like to trade options at 100 lot clip, a 200 lot clip, and try to move the market. People like that don't realize that now they are the market, and people are gaming them, and so it tends to make them blow out. That's you gotta find out if you're not winning every day, or if you're not making the right trades, what's going on. If it's your system, change it. If it's people adapting to your system, then you definitely need to change that, because now they're winning and you're losing. This is still a zero-sum game, pretty much.
No, I absolutely agree with you. I think you raise a very, very important point. I mean, I'll just tell you yesterday what happened with. I was playing the spoos from the short side, and I had entered in early in the morning, got closed out for a loss, entered late in the afternoon when I thought I had a good chance, better than 50-50 chance of winning, and ended up dumping it during the cash market before the market closed, before the options market closed. It actually closed. I would have made money had I held on to it. So it's a very difficult game out there, folks. Be cautious.
Yeah, it's things have things are the way they are, and you need to look at everything nowadays. That's why I've pretty much stopped day trading, and that's not really what I'm doing. I'm more holding things and buying things that I feel are undervalued. But you really need to know that if you buy something, someone else just sold it to you. So yes, there's ways to hedge everything and all tons of stuff, but still, you need to realize that if you're buying, someone else is selling. If you're selling, someone else is buying, and there can really only be one person on who wins out of that, or you could tie if it stays where it is.
Yep. Now, Monday I will not be able to do a show, but let's definitely do a show on Wednesday, because Wednesday I will also be hosting Two-Year Flipper, who's going to come in and talk about what's been going on in the bond market. And anybody that's lucky enough to follow him, it has been all over the place. I think ultimately he had a very successful week, but he has been he's been mercurial at best, up and down and all around. And he's always a wonderful guest and a great person to listen to.
Yep, I like him. I like his stuff that he puts out there. So everybody should watch it, and we'll try to get in a show on Wednesday.
Excellent. Muck, have a great weekend, folks. Thanks for joining us. Look forward to seeing you again. Any comments? Again, my Twitter handle is IUUBob, Muckbear, or at MuckBearPig. Let us know your thoughts. If you want us to discuss something in particular, let us know. Thanks. Bye.